For the first time ever, welcome. We got a video and a podcast going on at the same time. I'm joined by Paul Hill, equity analyst and full-time investor. You all right, Paul?
Yeah, popular demand.
I've got to make sure I stare at the stare at the camera. And you normally when you talking, I'm leaning back, doing all kinds. That's why I like audio. You see, you can do it.
Yeah, I know. Yeah, well, unfortunately, a lot of people have actually been saying they want a bit of video, but they probably are a bit scared by the way I look. But hey, that's the way it is.
Yeah. Well, let's start first of all. We're going to get into some stocks, but let's start first of all. But we can't ignore the U.S. elections. It's a slow car crash happening. Trump is dying in the slowest way possible, and he's denying it. He'll go to court. He'll lose that as well. It's going to be dreadful for him, I think. But it's a foregone conclusion. But the markets, everyone thought Biden would get in. The markets would tank. They're not tanking, and there's a good reason for that, isn't there? Really?
Yeah, hey, I think it's the best. I actually think it's the best case scenario for investors, simply because there's going to be absolute gridlock in Washington still. They were worrying about that blue sweep, the Democrat sweep across the whole of Congress and the presidency, but because of basically the Senate still staying with the Republicans, it looks as though nothing's going to happen, and therefore everyone's having a party on Wall Street.
Yeah, it's nuts. Do you know what I would recommend? I'd highly recommend on Netflix a series called Explained. I've just watched the last two series, and they do one-offs, and they've done one about the votes in America, how it came to be, from the start, when basically it was a privilege to vote, where you had to pay your money, and then it gets to become a right to vote. But even now, it's still hard, and it's still messed around with. And now, can you buy an election? And that's very good. It's starting with how much money they spend. And in our country, it's capped. I didn't know that. It's capped. You can't spend a certain amount. You can't spend more on adverts in Germany. You can't spend on adverts too much. It's capped. In America, it's nuts. They do a big graph. And they just show the size of the spend that Americans, and it's something like it gets up to 7 billion in all told, all the ads, everything. And you think that is nuts, 7 billion on an election. But you realize the kind of money it generates, then it probably isn't. But you think if there's no cap on it, there's corruption. It's open to corruption. You can get money from anywhere, pretty much, can't you?
Yeah, you can. But I would say, though, it's very unusual for this sort of 4-year cycle for elections, but it's a bit of a sideshow. The most important thing happening in the markets is what's happening in terms of infection rates. And I know we ran through it a lot, but there was some quite interesting news this morning from Astrazeneca. I don't know if you saw it, but they confirmed they were going to get phase 3 results out fairly soon on their combo with their vaccine combo with Oxford University. And they'd probably get approval from the European authorities before Christmas, which is brilliant. But I'll tell you what was really interesting, which caught my eye, and it came from the Wall Street Journal. You know how they're actually storing? They're producing this vaccine like mad at the moment, but they don't know the shelf life of it. And that's because it's live. A vaccine is live. It's basically, obviously, it's proteins and all kinds of stuff. And so they're storing it in basically a big freezer, And what that means is they can't yet put it into vials, into ampules, So what they're hoping is they're going to get approval, and then they're going to melt it down and then put it through production process. Now you can do that on small quantities, okay? Yeah. However, what really caught my eye is that you think what's going to happen next year. If they get approval or anybody else gets approval, then they're going to have to basically make this pretty much live and then pack it, because the supply chain isn't going to be able to suddenly turn a switch on and do 5 billion vials, I
heard this before, but saying, I remember Bill Gates saying, the thing is, the vaccine, when you get the vaccine, that's the problems. We've never produced a vaccine in this amount in such a short space of time. You can't just take over a vaccine factory, because obviously that's needed. So, and by the way, AstraZeneca's fallen short because of this. They're supposed to have 100 million doses by the end of the year ready to go. Now they've got 30 million ready to go. But do you know about the economics of it all? And everyone's saying AstraZeneca won't make money out of this. Now, don't be so silly. First and foremost, right, they wouldn't be doing it. That's the corporation that lives on profits. They are doing it for the good of people, of course. But this is like a flu vaccine. It's going to happen every year. They're going to be producing it every year. So they may not make money on this one, but over time, they will make money, guarantee. And someone put it, the market at 10 billion, the COVID market, vaccine market, I think Morgan Stanley analysts, 10 billion, that's at $20 a pop per vaccine. So, of course they will, because it's every year. It's like flu.
I totally agree. But you remember the company we talked about last week, SourceBio, okay?
Yeah.
One of their divisions does storage for drugs. And they do it at 5 degrees centigrade. So just think, you've got the US, you've got the UK, and you've got Ireland having to store masses of these ampules and vials, which have got live virus next year, in cold storage, not frozen, but basically in a fridge. Where's that going to go? Well, you can guarantee where some of it's going to go. It's going to go SourceBio. Okay, and I mentioned that last week. And now another one which is interesting.
So they only listed last week, didn't they? SBI is a ticker there, isn't it?
Just think how it's going to rocket potentially for their capacity, their drug storage business. Now, the other one to think about, which we've talked about, and I know you've been interested in it, is MPAC. Okay, they make high peak packaging machines. Just think when we start freezing, so we start defrosting these vaccine or make them next year. Who's going to have to make all these ampules in the terms of it's going to have to go to high-speed packaging machines. So they're right in the crosshairs to benefit as well. And the
look at the chart of impact a second. It's looking very good, actually. It's just
I think you and I both missed that opportunity.
Yeah, it's in a trend upwards. And look at that. Do you know what? When you look back at it, talk about the fear and greed of the market. You could have bought any stock in that sell-off, and you could have made money. If you look back, and it's the hindsight of knowing that fear is the time to buy. When you had fear like that, an impact, for example, you could have bought that in March at 175. It's now 395. Yeah. So it's like, and that's to be honest, there's certain companies that did 10 bags since March, but I mean, it's crazy how when you look back at it, hindsight is a wonderful thing, Yeah,
I think the other way of looking at on the sort of like when you get massive sort of like distress in the market is don't panic sell. So it's not just what to do, it's what not to do is key as well. And so if you've got good positions in solid businesses, even if they crash and they've got long-term prospects, they're going to do okay. So if you've held MPAC in March, in sort of like in January, and it went down, you were wrong to have sold it, and you held it and you were doing okay. So but anyway, the other thing, so you've got two winners there potentially from the Astra, which was really interesting, I thought. The other one, which is another one, is everybody's had a real...
Can you say one of that impact? I quite like that idea, because you think of it now, you have certain hot sectors, like we went into this COVID and all the COVID testing stocks have gone ballistic and gone mad.
Yes.
And now slowly we realize there's a lot of competition there. I've seen government contracts announced, and everyone who holds a listed sort of COVID testing stock, is that us? And I looked it up, and certain companies I've never heard of, they're private companies. You realize it's now becoming a crowded market now. There's so many people doing this testing, but then where's the next hot area going to be? And you've got to be right there. Packaging and storing these vaccines is going to be hot, isn't it?
Well, I hope so. Well, cool, you could probably say, but yeah, exactly. It should be a hot, cool market. But anyway, I'll give you another one as well, which again, I think the market, and this is a big cap on it, and we've talked about it before. We both like it, I think. GSK, what a flip, market cap, basically, which rated about half of what Astrazeneca is. Now, what I don't think the market realizes is this is a picks and shovels COVID vaccine, because it hasn't got a frontline vaccine itself. It is developing one with a startup business out in California. It's the world's #1 vaccine maker, and the reason why it's could do potentially really well out of this, it provides the adjuvant, which is an accelerator, an increase in potency of these vaccines to nearly all of the major frontline 6 vaccine makers. It does about 4 of them. So what that means is that Glaxo, get this adjuvant in, which I think is made out of something like vitamin E and shark oil or something like that, and it improves the potency of a potential vaccine. So you can then you don't need a small dose, a smaller infection, smaller dosage to do the same benefit. Or alternatively, if you want to give you greater immunity, you give them a bigger dose. So it's like effectively a concentrated dose of vaccine. Nobody's sort of picked that one up.
No. And do you know what? If you look at the charts of Astrazeneca, which is now the biggest listed company in the UK, and the charts of GSK, they're diametrically opposed. One, Astrazeneca top right of the screen. GSK just hit an oversold level on the RSI, which means it hit it went down below the March sell-off, which I don't understand. So,
well, exactly. And so what I would say is that if you're looking for not an unknown, people should know about it. I mean, the world's biggest vaccine maker, but I think it's underappreciated because of this adjuvant they've got, which is that effectively increases the potency of the vaccines. And it comes back to your point that apparently, none of these companies will make any money out of vaccines, and and I know that going forward every single year they are going to make a pile of cash out of it. So I think this is. In July,
AstraZeneca can declare whether we're post-pandemic, and then they can up their pricing on the vaccine. As now, it's limited, but once the pandemic is cleared and it's cleared as not a pandemic anymore, they can go to proper commercial pricing. So
and just think what will happen if you get 2 or 3 of these vaccines done, and we need 4 or 5 billion of them each year. Who's going to be supplying all the adjuvant for them? There's only one game in town. It's basically Astrazeneca. So I wanted to point those sort of 3 out, in terms of
GSK's, by the way, last time I looked, GSK's margins and all that are a lot bigger than Astrazeneca's, and I don't know if it's still the same, but I think I put 6, 7 months
there
ago.
are sort of slightly different stages of the of healthcare, because Glaxo has got sort of like more mature portfolio and therefore has higher margins, whereas Astra has very big exposure into immunotherapy for cancer and stuff like that.
Okay.
Another healthcare stock that is worth mentioning is another one. It's incredible, really, because it's been. I haven't bought anything, but I'll tell you, my portfolio on stock watch list, I can hardly fit them on the screen at the moment.
I know, yeah.
Verici DX, they listed this week, and they span out of Renalytics, and Renalytics came out of EKF Diagnostics. Now, this came onto the market, I think it was on Tuesday, and they raised £14.5 million at 20p, valuing the company at about 30 million market cap, I think it was. Now, just have a quick look on your screen what the shares are doing this week.
So, do you know what? I'm looking at your first. I'm on the front page of Vox here, and it's your interview there. The CEO.
The CEO, Sarah I spoke to the CEO, Sarah Barrington, who's out in Los Angeles, and the inventor of this technology, Barbara Murphy. And what the company does is they are effectively a groundbreaking immuno diagnostics firm for donor transplants, but specifically focusing on sort of kidney transplants. And the reason why I say it's groundbreaking, you've probably heard as well in the medical, that using the immune system to help treat or diagnose certain conditions is leading edge, and you can see that in cancer. Well, these are the only game in town for using the immune system, to target, what's used for diagnostics, to target the kidney donor market. And what they effectively do, you know as well as I do, in terms of it's quite difficult, sort of like getting donor parts from people, and so you want to make the great success out of them when you give them to somebody else. These guys massively improve 2 things. They massively improve. First of all, the matching process between the donor and the receiver, so you increase the success rate and reduce the level of side effects. So they do a predictive test that allows you to match that much better. There's nothing else out there at the moment. And then the second test they do is post-operation, post-transplant. They can test basically how the patient's responding to the donor, and therefore you improve the level of drugs, immunosuppressant drugs you give to the patient. So it improves their quality of life, it reduces the healthcare costs, and effectively increases the success rate of that donor organ being accepted by the patient. Now, the reason why the shares have rocketed this week is because people are starting to realise this is a really cheap stock.
The chart, right, is literally, we're going to get 3-4 days worth of chart there, but the first bar on the chart goes from 20 pence to 36 pence. Second one, it opened up to 37.5 to like 45, and now we're at 48 pence. It's more than doubled in 3 or 4 days. Wow.
Well, just give you this is the sort of like a 2-year thing. They need to do a validation test on the technology to get it finally approved. But when I say validation test, it's confirmatory. It's not actually they're testing anything new. They've got all the results. It's a matter of just validating it over the next 12 months. But to give you the opportunity set here, the market for this is estimated at roughly for these kidney immunodiagnostic tests is estimated, because nothing there at the moment, about $700 million per annum, and that is per annum. If you then basically assume they get only 10% market share of this, and that's quite a conservative, that's 70 million turnover. I mean, we're talking 80-90% gross margins here. These companies are valued at 10 times sales. Their biggest peer group competitor is a company called Care DX, which is on 10 times sales. So if you go 70 million turnover dollars, times it by 10, even I can do the maths, that's 700 million. You then divide by 1.3 on the currency, you get 500 million market cap. At this new share price, what is the market cap of
68 million at the moment.
Well, there you go. So there's plenty. That's why people are starting to wake up as a massive opportunity. They're fully funded, and the science has come out of Mount Sinai, which is one of the world's leading medical institutions. And as I say, when I spoke to Barbara Murphy, who invented this technology, I mean, she's one of the brightest cookies around in this sort of area. And you look at their science advisory board, and I asked her about this. I said, sort of like, what do you, how do you manage to sort of like, corner the market in global kidney experts? And she basically said they're all basically my friends, and I know them because anyway. All I would say is that have a look at this one because it looks absolutely terrific.
Yeah, absolutely. But I'm always scared by share prices have risen that. But I'm always remember being on a podcast and talking about a company, and this company went up by 300% in one day, and I thought I'm not jumping in there because I quite like the company. Then it ended up like about 7% up, and it kept going up the next day as well. So you never know these stocks; they can do that. But I try. You got to have a set of rules, though. I always find you got to stick to a set of rules. And if you see a company go nuts one day, if you just jump in anyway, you often get more burn than you will do well. So a bit of patience, a bit of research. Every share price has its down days, and that's what you got to realize. And sometimes, if it's rallied like crazy, it can have a couple of big down days. So, and that's research.
You sound like me, Justin.
Yeah. Well, no. Do you know what? I know people, so good investors, who recommended stocks to me, and it's moved already very quickly.
Yeah.
And I think, I've got in there, and it's just come back, and you're sitting on a loss for like, 3 months or whatever. I thought, well, if I had a bit of patience, do a bit more research, I could have got in a different level. And so it is all about not even the story, but a bit of timing as well. That's the thing with markets. It's very emotional, isn't it? You can jump in, you think it's going to the moon.
Yeah.
And the funny thing is, why that saying is buy low, sell high sticks around. This is very hard to do. I mean, the thing is, when everything's high, like the markets are very high, people think it's going to the moon. When everything's down, people think it's going to the floor. But no, the time to buy is when it's going down. But all the markets, everyone's bearish, and the time to sell is when everyone's bullish. But your emotions get caught up in that, and they can't do it. It's hard to do. It's hard to.
Well, in that context, I've got two others which I've come across this week. Which one was reported, another one I actually interviewed, which fits straight into that camp. Their shares have been on the floor for such a long time, and they've got great recovery potential. I interviewed CEO Tim Sykes yesterday of Proactis. Now, I mentioned this company because it's a bit like Rosslyn we've talked about. Rosslyn, which does all the cost control, etc., for corporates. Now, this Proactis does cost control as well, but largely on the overhead, on the indirect. So when you look at a P&L of a company, like a manufacturer, they call the cost before gross margin, which is the cost of goods sold, is the supply chain stuff. That's what Rosslyn do, and with all their big data. Anything below gross margin, indirects, is really where their software, Proactis' software, operate. Okay, so they both take out sort of 10 to 15% of a big corporate's cost base by implementing their software. Okay, so it's effectively spend management sort of systems is where their core is. What the similarities are, they've both got 90% recurring revenues, ARR. They've both got very high gross margins, and they've both got top-notch customer bases. Now, Proactis, which their share price is roughly around about, I don't know, early 30s when I last saw it. They've got, I think they've reached a tipping point because they're on about sort of like their sales are about 50 million. They've got ARR and SaaS revenues, to say, of about, well, I think ARR's underlying, if you strip out some other stuff, is about 41 million. And then you've got sort of like, if you add on the extra bits and pieces, which is volume generated, you get SaaS of about sort of 45 million. And they've gone through the ringer over the last couple of years. But actually, they're seeing quite a good uptick in their top line. They had record levels of new business wins last year, and it was about sort of like, I think it was 14.7 million pounds. Now, the point of that is, it hasn't yet dropped to the bottom line. As you say, that will come through, and you need to divide by 4 to see the revenue impact. And last year, that was neutralized by an over level of churn of about sort of equal. So the sales stayed about the same. But going forward, churn's coming down and new businesses going up as they replicate their success in Holland and the UK, in places like Germany, France, and the US. And I spoke to Tim, and I'll tell you, he's pretty bullish. He believes in the fullness of time, they can do sort of like 25, 30, even 35 million of new business wins each year. You divide that by 4, yeah, for the first year, and you get 6, and then you get 10% top line growth. But of course, you're going to get the benefit of that gain coming the next year, because you have to divide the new lot wins by 4, but then you get the other 4 which is already there. So you can see how top line growth can absolutely moonshot on the recurring revenue streams. And if they do that, then this business will easily be valued at 4 times sales. You put 4 times sales on 50 million of turnover, you get 200 million. You take the net debt out of about 44, you get a share price of over 150p. I mean, that's just like the maths. And where are the shares now today? I don't know, about 32p.
34 pence. And yeah, and do you know what? The share price there, it looks quite good actually, because it's in a range. It's not gone nuts. Of course, it's sold off again. You know, I keep looking at those dips and the dash for cash for March, and it went down to 13 pence, and now it's 34 pence. But since pretty much what is it, May, it's been flatlining pretty much. So that's quite nice there. It's not gone down. It's gone a little bit, but you know, it's a nice range. And all it needs, I think, some positive metrics, some positive news.
I've been following this company for years, yeah, and I've always been sort of like, you know, waiting for the right opportunity. And they've also got this other product called Be Paid, which basically accelerates early payments for small sort of like purchases by corporates to suppliers. It accelerates the payment terms by suppliers, and it's actually the only game in town. Because if you think about these forward-funded models using software, most of them are for big assets like cars, houses, you know, all this sort of stuff that the corporates buy, which are quite sort of capital intensive. Very few of them actually do these none of them which do indirect. So this could be an extra sort of like lift for the shares, but I wouldn't buy it for that. I would buy it for just the core business, because the actual valuation stands on its own 2 feet just on that. And if the B pay does actually get going and get momentum, you're going to see this definitely go well above 150, no doubt about it. So again, if you've got a 2 to 3 to 4 to 5 year view, you know, have a look at this, because you know, it's a very, very, you know, interesting. And then the other one, the final one,
PhD, that is, whether they took a PhD, Proactis.
That's a great ticker, isn't it? PhD. Anyway, the last one, and I don't know if we've talked about it. It's unusual, but it's a recruitment business, which is the UK's #1 STEM. And that's science, technology, engineering, and maths, sort of like, you know, staffing business. And it's been going through the ringer. The shares have come, they were hitting about sort of like, I don't know, sort of like, even worst case, sort of 40, 50p. They've shot up after the results. And the reason is because the management team have done an unbelievable job. In a downturn, they've generated masses of cash, and they've gone from a big net debt position a year ago of about, I think it was 20 million, 24 million or something net debt. They're now in a net cash position of about 14 million. And a lot of that has come through just from basically, you know, very good cost control and cash control, but also changing the terms of their contractor base, who they actually use, because that's lifted the cash position. It means that going forward, their working capital isn't going to be heavy at all. So their balance sheet is absolutely watertight. Now, the other interesting bit here is, one, they're on a rock bottom valuation because of nobody likes recruitment businesses. But if you look at the shares to what happened after the great financial crisis in 2008, 2009, there's a big similarity here, because when it hit the bottom of that cycle, the shares were about 50p, which is what they were, I think they're about 50, 60p yesterday or something. Now, and then a year later, they went to £2. They stayed at about £2 for until 2012, and then they went from £2 to £6 in about 12 months. So when you're talking about timing and thinking when you're buying when there's blood on the streets, well, I think there's more rivers of blood here than there is anywhere else in the market, because everybody hates the sector. But if you think about,
hang on a second, who do you say this was? I missed
this is Gattaca. This is Gattaca.
Oh, Gattaca. Okay.
Sorry, I thought about it anyway. So it's Gattaca, yeah. And they basically, as I say, they do engineer. They're the UK's #1 recruitment agency, or recruitment firm. And as I say, they've basically got a brilliant turnaround situation. And if the market goes in their advantage, then they could do obviously really well. I have a fair value for this stock of 140p, and that's pretty conservative.
Yeah, they're 58 now. Okay, and do you know what? I've just been looking at recruitment, I always look at the American job numbers, you know, to see where they're going and where they've been, and it's sort of encouraging. I know it hasn't. The second wave hasn't really locked down America like it's locked down Europe and the UK, But if you look at the continuing claims at the peak in May, it was 24 million. And now we're down to 7.3, and only starting off at around 3.5. So we're getting really back to where we were previously. So it's very encouraging that a lot of people are going back to work in America. You know.
Yeah, and if you actually think about what's going to happen, when we get the economy going, it's the Boris boom, 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 isn't it? Big infrastructure, which is HS2, Hinkley Point, Crossrail 2. I mean, there's massive schemes. You've got huge roads and rail investment to be done to get people back to work. Plus, with more people working at home and going into the cloud, you're going to have that huge sort of like, retraining business, retraining people from doing certain jobs into more tech jobs. And they're absolutely right in that it should be a beneficiary. So you could see that huge operating leverage for Gattaca, going forward, because their cost base is as tight as a drum at the moment.
Yeah, I don't know whether mentioning Boris is a good thing or a bad thing these days. Because let's be honest, a friend of mine, I said recently, I said something on a WhatsApp group with a friend of mine, and he said, "Yeah, but you said there wasn't going to be another lockdown." I said, "Listen, I wasn't the only one saying that. The Prime Minister of this country said that about 2 weeks ago, and there is a lockdown." But the thing is, what I said is, yeah, but if you look at this lockdown, it's less severe than the last lockdown, and there is less patience for lockdowns now because, of course, therapeutics are out there that are. Less people are dying of COVID.
Steroids,
so I understand. Like, and all we have to do is we have to limit that, the amount of hospital admissions. But that will happen as soon as you get these vaccines in. Like they said, apparently before Christmas, and several sources have said this. NHS staff and over 85-year-olds, I think they're saying, will be, vaccinated pretty much, and that's the vulnerable groups are taken care of pretty much, and then we can sort of open up. So even if we have to do another lockdown, which I doubt it'll be again less severe than the one we got now. So they're getting less severe. So I don't think we'll have another lockdown now, though, because we are weeks, months away from, inflection points in regards to vaccines and all that stuff. So there we are. I think
I'm with you. I actually think Boris has dropped the ball on this. I wrote about it on social media this morning. And what I think we need now, urgently, is the government to educate people that we've just got to live with with basically, the virus for a short term, and we've got to basically, sort of almost shock them, be graphic in that if we get this secondary transmission between people who have got it and the people who are vulnerable, whether they're elderly or whatever conditions, we're going to get lots of hospitalisation. We cannot have a lockdown. We can avoid a lockdown simply by better social distancing and people being disciplined. If they catch it, then they basically, if they want to go and party, they don't transmit it. And if you get both ends of that, the vulnerable and the youngsters or the people who are the super spreaders from not super spreading, everybody's sort of like, working to all our benefit, then you can avoid the lockdown until we get the vaccine, and then we're absolutely, we shouldn't have a problem. So I just think we need. Do you remember when we were kids and stuff? We had those Benetton adverts. We need some type of really shocking advert that scares people, that stops this secondary transmission between the people who've got it and the super spreaders and the people who are actually vulnerable and, of course, basically going to have real problems with it. And if we stop that secondary transmission, the people who get it is going to be fine, and we don't need to go back into second lockdown or third lockdown. Anyway, I just think I just think the government's dropped the ball on it.
Yeah. Soon of it. I mean, they're doing Liverpool are testing the city there, and soon there will be tests. I think soon, as fast as like a breathalyzer test, and I think it should be the same kind of case. If you're out mixing and you've got COVID, they can breathalyze test you and literally within minutes know if you've got COVID and you'll be fined. And that's where it should be. I was talking to a guy who's got an investment fund in the week in Vietnam, right? 97 million population in Vietnam, 35 deaths they've had. That's all. Yeah. And that's because they listen to the government to say you social distance or you're in trouble, and that's it. Yeah. And the same China.
And that's what we need to do.
And they haven't have to lock down. Don't even lock down. So there we are.
Yeah.
Marvelous. Well, listen, we've got to say, if you like the video, you've got to hit that subscribe button and the notification bell as well. If you want to be notified, it'll send you an email whenever we release a video, and also you can listen to it on the podcast. But marvelous stuff. Cheers for that, Paul, and we'll speak to you next week.
Yeah, praise Justin.